the BOJ really has gone off a deep end in terms of quantitative easing. They call it quantitative easing plus plus, and we'll see tonight whether or not they extend that. What has the BOJ done? Well, they've expanded their balance sheet to about $4 trillion over the past year or two. They have negative interest rates now. They're buying corporate bonds and they're buying stocks. I was fascinated by this, Mike. That of the large cap Japanese stocks, of the 10 largest holders of these, the BOJ is a holder of 90% of these large cap stocks, one of the 10 largest holders. And so that indicates to me that the BOJ is really in this to win it. I'm not so sure that they're winning it at the moment.
Is there a trade you could put on ahead of the Bank of Japan?
Well, mainly yen-dollar related. I would think if Kuroda, suggests even more in terms of more significant corporate bond purchases and an extension into the stock market, that would certainly affect the yen-dollar relationship. Actually, as you know, over the past month or two, what they've been trying to do in terms of more QE and more stock purchases has sort of backfired, and the yen has strengthened as opposed to weakened. So, it's up for grabs. I wouldn't safely put on a trade overnight based upon anything that they do, because the market seems to be going in reverse relative to forward in terms of what the BOJ wants to do.
Do you think that the BOJ and the Fed are in the same boat in terms of what they're trying to do here? I know you don't think the Fed is doing the right thing. You have written that investors can't make money when money yields nothing.
Well, that's true. I don't think the BOJ is concerned about that. They're concerned about 2% inflation. They're fixated on that, and to a certain extent they've moved above the zero line. But, whether or not their insurance and savings institutions are getting a fair deal with negative interest rates and, an artificial market in most aspects, I don't think that's their concern. Their concern is fighting the demographic deflation and the global deflation in commodities that has placed their future growth in jeopardy. And they're all in, certainly, like Draghi has suggested, but even more so. I simply think they're going to try to get to 2% inflation. Whether or not they can safely do that without expanding their balance sheet so significantly, I'm not sure. I doubt it.
How much risk is in the world right now? The Fed took their statement about global overseas risks out of the statement today, but is it still a concern? You've made some big bets on, say, Brazil not defaulting. Are there concerns about systemic problems around the world still?
Well, for sure, and those Brazilian bets were very short maturities, and most of them have rolled off. I, for one, am concerned, about a global marketplace in which prices are artificially high. I'm concerned about debt levels, especially in China, that are increasing at an almost geometric pace, relative to GDP. The expansion of debt relative to GDP, not just in China but elsewhere, is really symptomatic of the risk that we have in terms of financial markets, to the extent that investors can be assuaged, can be convinced that they're relatively riskless, as in the ECB buying corporate bonds and the Japanese buying corporate bonds and stocks as well, then maybe so. But, let's put it this way. Let me put it bluntly. I think intelligent investors know that there's something very wrong with the system, but they also know that over the next year or two that they need to, provide a return for investors, or else they're out of business. And so the guessing game becomes one of musical chairs, in which we all wonder when, this system, this artificial system, might implode. And for the most part, the guessing game is extended to 2017 and 18 and 19. But at some point, the system could suffer an implosion.